Welcome to a presentation for the ROI of getting solar.
Hello everyone, it's Alex, your fellow neighbor from Picket Post Lane. So I've had a few people stop and ask me questions about my solar project, and usually the questions revolve around return on investment and buyback and those types of things. So I just thought it'd be easier to put together a quick little video that kind of talks about that in a little more detail. If after watching this you still have some other questions, you can always go back and watch my full-length feature film from the other week. It's 45 minutes, but it's packed with some really good and helpful information. So just a few things to keep in mind with a solar project. Currently, there is a tax incentive of 26%. After this year, that 26% drops down to 22%, and after next year, it actually goes away completely. So it's an opportunity for you to actually save about a quarter of the cost of the project by doing it this year. The other thing too to think about is the rising cost in energy over the next 5 to 10 years. Those costs are going to continue to rise. So this is an opportunity to invest in something that's going to help stave off having to pay for those increases in prices. The other thing too, and I posted a couple articles about this, is the rising home value. People that invest in solar have found increase in their home value by as much as 4%. The other thing too is timing. There is still time left in the year, so that if you were interested or have been thinking about doing a solar project, there is still time available for you to be able to invest and get it done this year and take advantage of the tax incentives. And then lastly, so thinking about return on investment. When you start to crunch the numbers, and we're going to do that here in just a minute, really you're going to start to see that you're really just redirecting the money that you're already paying for your utility to pay for the cost of getting solar installed on your home. And really over a short period of time, it ends up paying for itself. And then what happens is instead of paying a utility bill every month, you're actually saving that money. There's also some other incentives, and I'll explain those in a little bit more detail, where you'll actually be able to earn money back. So it kind of got me to thinking that everything that you buy in your home is really an expense. Everything costs you money. But this is really one investment where you're not just going to be saving money, you're actually going to start to earn money back. So I started to chuckle a little bit as I started to think about, when you're young and your parents always told you, money doesn't grow on trees. Well, here's actually an opportunity where it may not grow on trees, but it could actually kind of grow on your roof. So just kind of silly, but something to just keep in mind as you start to think about whether solar is right for you. So without further ado, we're going to dive right in. Hopefully you get some value out of this and enjoy. So there was actually something I forgot to include in my introduction, and it's actually a pretty significant Easter egg that I discovered in my solar project, and it pertains to getting a new roof. So if you actually got a new roof in 2020 and you invest in solar in 2020, you can claim the cost of your roof with the tax credit. So yeah, that ends up turning out to be a pretty significant chunk of change. So when we start to crunch the numbers, you're going to see how the investment in getting a roof actually helps in the payback and the return on investment. So anyway, stick around. I think you'll definitely get some value out of watching this.
So we need to figure out what are my costs and then what's my ROI. So let's take out your Pico bill and turn to page 2. So here's a screenshot of my Pico bill, and I've highlighted 3 main areas. The first is the distribution charge. Second is the generation charge. And then the third is my utilization, and we're going to dive into that here in just a minute. But the first thing we need to look at is the distribution and generation charge. So we need to put those two numbers together to figure out what our electric rate is. And you can see in my example, the electric rate is just a little over 23 cents per kilowatt hour. If we look at our utilization, the average kilowatts that I used per month was 859. And the amount of kilowatts that I used over the past 12 months was 10,309. So if I take my electric rate and I multiply the 23 cents per kilowatt hour times 859, which is the kilowatts per month, That tells me that my average electric cost per month was right around $198. And if I do the same thing, the electric rate and the total amount of kilowatts that I've used over the past 12 months, multiply those numbers together, and you find out that my annual electric cost was actually $2,375. So just from a simple review of the your Pico bill, you can find out what your electric rate is, how much you actually pay per month in electric, as well as how much you've paid over the past 12 months. So let's go to the next step and look at solar panel cost and incentives. So the gross cost of this my solar panels was $19,900. Now, as I mentioned before, there's a 26% tax credit that you can apply to that, which does reduce the cost a little over $5,000. So when you do that math, you find that the cost of the solar panels actually drops down to $14,726. Remember, I said that there's an Easter egg regarding a new roof, which I did get in 2020. So I'm just kind of ballparking here just for a round number. But suppose the gross cost of the new roof was $15,000. Now, the percent of the roof that's covered by solar panels is approximately 40% of the roof. So when I take 40% of 15,000, I find that the amount that I can claim with the tax credit is $6,000. Now, if I apply the tax credit to the $6,000, I find that the new roof tax credit is $1,560. Now, let's apply to the cost of the solar panels, and that actually decreases the cost of the solar panels to a new net cost of solar being $13,166. Now remember, there's two other incentives that I mentioned that we're also going to look at, and one of those is something called net metering. Net metering is essentially the banking of your kilowatt hours that your solar system produces per month. So suppose you have a month where your solar panels generate more than you use, you actually build those credits to apply in future months. Now, at the end of the calendar year, and for Pico with net metering, that is the end of May, suppose you have an excess of kilowatts that you didn't use throughout the year, you actually will get money back from Pico. So let's run through a quick calculation of what my prospective return would be with my net metering. So you can see the solar production that my system is expected to produce is 103% of what I utilize. So that basically calculates to be 10,600 kilowatts. When you look at my utilization, remember it's 10,309 kilowatts over the past 12 months. Just doing some simple math, you find that my excess electricity produced by my solar panels is 291 kilowatts. Pico uses something called a price to compare rate, or the PTC rate, to determine how much payback to give you for your excess production. And right now that rate is 0.06405 cents per kilowatt hour. So again, you multiply that number by the excess kilowatt hours, and you find that my net metering payback would be $18.64. Not a lot of money, but again, it's just kind of an estimate and something that I wasn't expecting to get paid back. The other thing too is something called a solar renewable energy credit, or SREC. Now an SREC is basically a credit that you earn for every 1,000 kilowatts that your system produces. So remember, my system is going to produce over 10,000 kilowatts, between 10 and 11,000 kilowatts. So that means that with one SREC being equal to 1,000 kilowatts, I can expect to earn 10 SRECs in the course of a year. These SRECs are traded on something kind of like the stock market. And right now they are trading right around $22 per SREC in the state of Pennsylvania. A little bit, taking a bit of a downswing. It actually typically fluctuates between $40 and $50 traditionally, but just for the sake of the example, I'm going to stick with the $22 per SREC. It would be another $220 per year that I would expect to earn in return from my solar panel production. So now let's take those numbers and start crunching some ROI. Now, let's assume that I paid for my system with cash. So I took $19,900, paid cash, and then obviously got the tax incentives back. So the amount that I actually laid out was a little over $13,000. So how does that roll up into determining what my return on investment would be? So remember, my annual electric cost from looking at my Pico bill was $2,375 over the past 12 months. So we're going to assume that that cost is going to be frozen in time, and we're going to use that number going forward. So you start year over year cost. So $2,375 every over the next 5 years is over $11,000. If you look at by year six, I will have just looking at the amount of money that I would have saved with solar panels. By year six, I would have already earned or saved enough that my system would have paid for itself. And you can kind of see where I've highlighted that. Now, if you also factor in the SRECs that I would have been earning from each year, as well as the net metering, again, assuming things stay frozen in time, you can see that by year five, I would have earned or saved enough money that I would have paid for my system. And that's highlighted there with the $13,068. So what really that means is starting right around year seven, the if you look at the annual cost of what I was have expected to pay for my Pico bill, actually now that I'm saving that money on top of the SRECs, on top of the net metering, so year over year I'm earning over $2,600 or saving $2,600 that um, in return. So what does that look like by year 10? That means I would have saved over $10,000. And then by year 15, I would have saved over $23,000. So again, kind of looking at the long term, you can see by year 20, by going solar, I would have saved over $36,000. Again, looking at numbers that have been frozen in time and not looking at any fluctuations in those amounts. So. But let's suppose I don't have, almost $20,000 to shell out for a system. I most likely would have to go with a fixed rate loan. So looking at current interest rates, so fixed rate loans, they're between 3 and 4%. I've seen one down, as low as 3.59%. So I'm going to stick with that as a interest rate on a fixed term loan. Now my loan amount, I'm going to use the $13,166 from the net cost of my system. Now, if I apply the $198 that I have been paying per month for my electric, you can see my payoff for a fixed rate loan is 75 months. And the calculator that I use, the link is at the bottom, and you can see how that bears out with the monthly payments, the loan amount, and the term and the interest rate. So let's talk about some of the assumptions, and I've kind of mentioned these already, but we're going to assume that my electric rate stays the same. Obviously, with the next 5 to 10 years, utility rates are going to continue to rise, but just again, for the sake of the example, we're going to say that doesn't change. That's going to stay the same. Also, as I mentioned, the SREC trade value, currently it's going through a bit of a downswing, but it typically sits between $40 and $50. But again, just for the sake of the example, we're going to assume that that stays the same over the next, say, 15, 20 years. Also, the price to compare rate, the PTC rate. So obviously, as the cost of the utility rate goes up, the PTC rate should also follow suit. So again, the net metering payback, I would expect to also increase as well. One thing I am also kind of assuming is that the solar panel production is going to stay the same amount from year to year. And actually, as the system ages, it does have a slight decrease in production potential from year to year. It's not much, I believe. The type of panels that I purchased, there is a decrease of approximately, I think it's 0.5% year over year. So. But there is a guarantee, a warranty guarantee as far as what its production is expected to be. And then also that obviously I'm going to use the same amount of electricity every year. Obviously, as things change, that production or that utilization may change from year to year. as well. But really, so the big question is it worth it? Is the investment really worth it? Now, obviously, I've kind of gone through all the different assumptions, but then factoring in the consideration that things like the solar increasing the home value by as much as 4%, the currently available incentives and tax credits, the payback versus the life expectancy of the system, which I'm looking at maybe a 5 to 6 year payback versus a life expectancy of 25 years, and how long we expect to live in the house. Obviously I put 5 to 10 years, but our plan is more 15 to 20. And again, as I mentioned before, the anticipated rising energy costs. For us, it's really kind of a no-brainer. This is absolutely a great investment for us. So if you find yourself thinking that this might be the right thing for you to do, so the question you might be asking, well, what do I do next? So my biggest recommendation is don't delay. The time is almost up for 2020. Um, the best thing you could do at this point is go to something like an energysage.com just to get free quotes. Again, I put the link in the on this PowerPoint slide. It really is easy. You get to talk with an Energy Save solar advisor. They'll help you figure out if solar is right for you. And also, your contact information with the vendors that they help put you in contact with is really hidden, so you won't get pestered with phone calls and emails and all that kind of stuff. All that stuff is handled through their portal, and is kept private for you. The other option that you could do is you kind of cut to the chase. I contracted with a company called PowerStream Solar and Electric. They're based out of Narvon, Pennsylvania. Their phone number is there. And if you do contact them, just please tell them that Alex Wilhelm referred you. And yeah, so hopefully this has been helpful, and best of luck. And feel free to reach out if you have questions or want to talk further.